Gary Gensler just said this about the XRP Win. One altcoin is up 170%, and Chainlink gets a massive update. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin has spent almost a month at or near $30,000, but this is no coincidence, new analysis claims. On-chain analytics platform CryptoQuant highlighted three key factors keeping Bitcoin price action in the same place. Bitcoin has rebuffed any attempt at a breakout for weeks on end, making casual one-year highs but always falling lower afterwards. For CryptoQuant contributor Axel Adler, this has roots, among other things, in speculative trading. He notes that short-term holders have divested themselves of their holdings since April, leading to an increased selling pressure above $30,000. This group is actively selling off their Bitcoin reserves, exerting significant pressure on the market. This indicates that short-term holders are actively liquidating their assets, thereby locking in their profits. Bitcoin miners are also on the radar this quarter, as higher Bitcoin prices spark an uptick in sales. For Adler, selling Bitcoin holdings to cover expenses ahead of the block subsidy halving in 2024 marks another factor influencing price performance today. Miners are actively selling their Bitcoin reserves. This is not a random occurrence. We have seen peak sales over the last year, and this is connected to the upcoming halving event, when the reward for mining Bitcoin decreases by half. Miners require liquidity invested in new equipment to stay competitive. Bitcoin volatility also remains among its lowest in terms of historical context. CryptoQuant reveals a net slowdown in trading activity since April, as those taking profits hope for a more substantial breakout to come. The Bitcoin Historical Volatility Index is at 14.77 as of July 18th, far below even its 2023 peak. All these factors together form the current picture of the Bitcoin market, where prices appear to be stuck in a narrow range.
We went to a bear base and bull case. So our bull case is, I think it's 1.5 million. The base case is 625,000, something like that. Now, one reason we've actually internally, our confidence has increased towards the bull case is because of what happened during the regional bank crisis in March. What happened? Bitcoin, so as regional banks are going bankrupt and the stocks are imploding across the board for the KRE, Bitcoin rallied from 19,000 to 30,000. Why did that happen? That was a flight to safety. That is the insurance policy that we are talking about, that we believe everyone will want at the end of the day.
Our partners at Bybit, the world's third most visited crypto exchange, is taking its Ethereum Liquid Staking service to the next level. Starting today, users can redeem their staked Ether tokens for ETH on a one-to-one basis with zero fees. Bybit's Ethereum Liquid Staking service offers users an exceptional opportunity to earn up to 7% APR. The staked ETH tokens accrue steady rewards from the Ethereum network and can be later exchanged back to the original capital plus interest. Bybit also enables clients to use staked ETH as trading collateral for maximum capital efficiency. Leveraging the potential of staked assets allows traders to explore a world of next-level opportunities. Naturally, the generous APR is accrued regardless of whether or not it's used for trading. Bybit is also offering additional earning possibilities through staked ETH collateralized loans, enabling clients to put their assets to work in further financial activities. Vivian Fang, head of financial products at Bybit, said, "With Bybit's Ethereum Liquid Staking and staked ETH redemption service, users gain access to a seamless and user-friendly ecosystem, which provides both passive income and active trading opportunities," adding that we are committed to empowering our users with the best tools and features, and the introduction of staked ETH redemptions is yet another step towards achieving that goal. We also have an exclusive campaign with Bybit. You can now earn up to $30,000 with your trading. It's simple. The more you deposit and trade, the more you earn. To find out more, just check the link in the description below. The development firm behind the Chainlink protocol and its native token Link has gone live with its cross-chain protocol aimed at providing interoperability between traditional finance firms and both public and private blockchains. In a July 17th post on the Chainlink blog, Chainlink Labs chief product officer announced that its cross-chain interoperability protocol, or CCIP, has launched under early access on Ethereum, Avalanche, Polygon, Arbitrum, and Optimism. Developers on these platforms will have access to CCIP on their respective testnets on July 20th. CCIP is an interoperability protocol that allows enterprises to transfer data and value between public or private blockchain environments directly from their back-end systems. Chainlink's interoperability solution uses Swift's messaging infrastructure, which is used by over 11,000 banks around the world to facilitate international payments and settlement. In 2021 alone, the network settled about $1.8 quadrillion in transactions from over 11,000 member banks, according to the United States Financial Crimes Enforcement Network. Chainlink co-founder and CEO Sergey Nazarov explained on June 17th that CCIP aims to bridge the on-chain and off-chain worlds. Just like key standards such as TCP/IP, remade a fragmented early internet into a single global internet we all know and use today. We are making CCIP to connect the fragmented public blockchain landscape and the growing bank chain ecosystem into a single internet of contracts. Nazarov added that an interoperability solution that can seamlessly transmit value between networks will be a critical building block for a blockchain-powered society. In addition to the 5 blockchains integrating CCIP, the decentralized finance protocol Aave is set to implement the interoperability solution, while the decentralized derivatives platform Synthetics is already live on the CCIP mainnet. Coinbase CEO Brian Armstrong will meet Democrats from the House of Representatives and Congress behind closed doors on Wednesday morning, with the crypto exchange embroiled in a legal battle with the U.S. Securities and Exchange Commission. The private meeting will be with members of the New Democrat Coalition, a group of over 100 Democrats who say they are committed to pro-economic growth, pro-innovation, and fiscally responsible policies. The meeting will concern digital asset legislation and related issues including tax, national security, privacy, and climate. Recently, lawmakers from the House and Senate have introduced separate bills in an attempt to bring clarity to crypto regulation, though the reality of a divided Congress means it's unclear whether such efforts will bear fruit. On June 6, the SEC charged Coinbase with breaching federal securities laws. Coinbase responded saying the SEC's actions violates due process and constitutes an abuse of discretion. Coinbase's shares rose over 24% on Thursday after a court handed Ripple, and by implication the crypto industry, a partial victory in a case against the SEC, ruling that Ripple's XRP token is not a security. The SEC Chair Gary Gensler said on Monday that he was disappointed with the district court's decision in the Ripple case regarding retail investors, but pleased with the part of the order which found the institutional sale of the token did violate federal securities laws.
How does this ruling change your approach, if at all, your abilities when it comes to regulating crypto and specifically crypto exchanges?
Look, our approach has been the same. It's about protecting investors, facilitating those who want to raise money, and the markets in the middle. And that's true whether it's in other parts of the securities markets or the parts of the crypto markets that are securities. And in terms of the decision, we're still taking a look at it. We're pleased with how the court's addressed itself to that a token for institutional investors is a security. How they address themselves to fair notice, disappointed in other aspect about retail investors, but we're still taking a look at that and considering it.
Ripple scored a partial victory in its fight with the SEC last week, with a court ruling that institutional sales of the tokens violated federal securities laws, but sales on exchanges and programmatic sales did not qualify as the sale of a security. XRP's market cap rose by $21.2 billion within hours of the ruling, becoming the 4th largest crypto, up from 7th place. Kaiko said, however, that the SEC may appeal the ruling. Ripple CEO Brad Garlinghouse expressed confidence that an appeal decision would favor Ripple. We also recently posted a full video on the Ripple lawsuit victory and what it could mean for altcoins in the future, which I'll put in the description below. The Injective community has voted to bring XRP to the ever-expanding Injective ecosystem by listing the XRP USDT perpetual pair. This development is expected to bolster XRP and USDT liquidity on the Injective protocol and expand available trading pairs. The official Injective Twitter handle highlighted the development in a recent tweet, calling the public's attention to its significance. Notably, the proposal dubbed IIP-238 was submitted by an Injective Labs team member. Chris proposed the idea just a few hours after the judge declared that XRP is not a security. Per information from the Injective Hub governance section, the community has voted to pass the proposal. Notably, an overwhelming majority of votes, about 99.78%, went for yes. The development comes less than 2 months after Injective integrated Polygon to allow market participants to use native assets on both the Injective and Polygon protocols. Recall that Injective also integrated assets from Solana in February. The inclusion of the XRP perpetual pair on Injective aims to meet the demand from the Injective community. Moon, the native token of Reddit's crypto community of over 6.5 million users, has chalked up a triple-digit price gain this week. One analyst cited Reddit's recent change in terms of service as a possible reason for the impressive price rally. Moon's price has surged 170% to almost 25 cents from 9 cents, according to data from CoinGecko. Moon is an ERC20 token distributed as rewards to users for their posts or comments in the cryptocurrency subreddit. The coins can be freely traded, tipped, or spent in the community for different purposes. The tokens can also be stored in Reddit's Ethereum-based wallet called Vault. The Bricks token, distributed as rewards for contributions in the r/Fortnite, have surged 300% in just 2 days. Over the weekend, a trending post in the r/cryptocurrency subreddit said Reddit's terms of service have changed, allowing the trading of verified virtual goods like avatars and Reddit's community points. According to CoinGecko's co-founder Bobby Ong, the speculation about impending changes to Reddit has driven the two tokens higher. Reddit's terms of service recently changed, where it now explicitly allows for trading Reddit's tokenized community points. The change also goes alongside the removal of Reddit's non-tokenized coins and awards. This has resulted in Moon and Bricks tokens increasing by over 100% in value this week. week. Note that community points have always been tradable, but it's more troublesome to trade them through the Reddit app. A member of Kraken added that the exchange is always open to adding new digital assets. The comment has raised hopes for an eventual listing of the Moon tokens on the Kraken exchange and may have contributed to the token's price surge. That's it for Altcoin Buzzy's update. I'm your host, Cody Buffington. Thanks for watching.